What's happening, everybody? Happy Friday. Welcome to the Pulver Report. It is June 11th. Let's go ahead and get started this morning. Happy Friday. Let's talk about some stocks, options, Forex, and cryptos. Let's get some AV confirmation out there. If you can hear my voice coming through loud and clear, and I see that we're live on YouTube. We are pushing live on Twitter and Facebook. Nice to see everybody. Pushing live on Twitch. All right, let's get into the charts, get into a risk disclaimer. Nice to see everybody. Here we go. Let me move myself out of the way just a little bit. All right, we understand the risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Anything that I'm talking about is for educational purposes only. All right, now I'm going to cue the Mario Brothers sound, and let's get into the charts. All right. So, want to take a look at things for this week. Fairly quiet on the news front, pretty quiet on the earnings front. We didn't really have a lot of major news to move the market. We had CPI numbers come out for the U.S. this week that were slightly positive, but I'm watching the 10-year note, and we are down to 1.45. So, on that note, I'm going to look at the 30-year mortgages, and we're at 3.08. for the 30-year, 2.49 for the 15-year. So still getting while the getting's good, even though the real estate market is low inventory, interest rates are still very low. So that's a good thing. The question is, how low will they go? You know, are we going to come back into these Fibonacci levels that we've talked about before we start to rally above? This is high at 1.8. If we get into that 2% zone, that's where I'm putting the kind of the ultimatum for the bull market here. If we start to raise above 2%, you know, that reality and inflation and rates rising will probably force the Fed's hand at some point in the near future. So interesting. Had a conversation with a friend of mine yesterday, you know, talking to some entrepreneurs and, you know, small businesses out there, and there is definitely a labor shortage. So, you know, we still have 7 to 8 million unemployed in the U.S., and I'm sure it's like that elsewhere in the world. I don't know if other parts of the world have, you know, the type of unemployment benefits and extensions that we have done, where right now, if you're not working, some workers are able to make as much or more money by staying at home collecting unemployment up until at least September. So I don't think there's a real motivating factor to see 7 or 8 million jobs recover, and companies are seriously looking to hire. I mean, you're reading headlines on the private sector offering, you know, $15 an hour, $17 an hour, bumps in, you know, 100K within a year or 2 years or 3 years, big bonuses, stuff like that. So if people want to work, I'm hoping that there are jobs out there for everybody. You know, if you don't want to work, okay, but we'll see how that all plays out. Anyway, CPI numbers, like I said, were positive this week. Market was pretty quiet. Let's take a look at the SPY. Take a look at the SPY. We are looking at a pre-market 424.32, which is around 70 cents higher than yesterday. Nothing to really derail it. We still have a monthly pivot for June, 415, so it's a little bit lower. I am looking for something like this. You know, we might end up scoring a minor point for those bulls and then having another 4 to 5% snap back. If we're going to see some indecision for the summer, you know, technically speaking, this is what I would expect to see. And if we have, you know, sideways movement, it's going to be a really important fall, right? Interesting. Yeah, Kathy says Walmart here pays $17.50 just to start. Yeah. I mean, hopefully if people are looking, they can find them. You know, if you want a job, hopefully you can find it and get it with reasonable pay and benefits. You know, 'tis the starting point. So SPY, pretty quiet. We are looking to open up at new highs. You know, a lot of indecision. Just look at this week's candles. This has been pretty wild. So yesterday's candle, big indecision. It did close bullish slightly. Wednesday's candle, bearish slightly. Tuesday's, I mean, just a really quiet week. I mean, overall, we're talking about a move from, let's say we don't close any higher than yesterday. We're looking at a move that's less than 1%, 0.84% for the week. And that looks like, you know, 4 to potentially today's candle, 5 indecision candles. If you go to the DIA, DIA has a little bit more volatility. From the start of the week, we've had a bit of a sell-off on the Dow. So from here to current price, we're sitting down about 1.12% this week on the Dow. We are seeing a little bit more of the transition back to growth this week. Equities on demand, we had this conversation. We protected profits in Ride and skills. Possibly if you were in workhorse at a decent price. I have some option plays running on workhorse and skills and ride and some other, some growth related stocks that, are doing really well. They pay pretty solid premiums. That's again, more kind of the growth outlook as opposed to blue chips and, big stocks or value stocks. So the Dow has been underperforming a bit this week. We're still not at the highs, which the high back here in May 10th. We have the recent low after that high. We had a 7 to 8% sell-off, or was that a 4%? I think that's 4%. That was a 4.45% sell-off. It was the NASDAQ that sold off 7. The NASDAQ sold off 7. The IWM, the Russell, sold off about 7 to 8. So the Dow is kind of underperforming, but still pretty quiet. And look for the high, look for the low. You can see that my little dotted lines here are chart alarms, so I'm just waiting to see where price will activate one of those alerts, whether it's to the upside or the downside. So, we have a lot of indecision going on out there. We have some pops in stocks every now and then. If you're taking a look at movers, the day's movers, there's always something that's moving. That's what's pretty exciting and appealing about the stock market. Doesn't mean they're always great stocks to trade. We had... Trying to think this week, I read up on some stock twits yesterday. I know that we had some Chewy earnings were positive, even though it's $2 down this morning. So we'll see how that plays out. We have some Master Blaster strategies on that for equities on demand, looking for earnings to hopefully give us some decent movement. But that's the Dow. Let's go to the Qs. NASDAQ, interesting. It's interesting how the NASDAQ is performing pretty well, probably on the coattails of big tech. Your Amazons, your Microsoft, your Apples, your Facebooks, all those stocks still performing pretty well, still staying very resilient. Probably more money just getting added to them and dragging NASDAQ up. You've got your growth stocks, tech stocks doing pretty well, but this is also now starting to penetrate the SPY. The SPY making new highs on the coattails of the Qs, pretty interesting correlation. And we kind of saw that last year, FANG stocks, right? SPY was doing really well on the coattails of 5 to 8 stocks. So IWM, take a look at this one. This is Russell 2000. We are holding, so equities on demand, we decided to close out our calls and we are holding puts. So we have until the end of the month. We have an expiration out onto 6:30, which means not 6:30 p.m. a.m., but we're talking June 30th. So if price is going to make its way down, halfway to this range or down to these lows around 215 or 212, we should see some put value increase. And maybe we can take that little dollar, I think it was like $1.59 that we lost or $1.80 that we lost, and turn this into hopefully a $4 to $5 winner if price cooperates. So I do think that we're a little capped to the upside on the IWM. We have some pretty obvious support down here. And if we see price actually follow through the next couple of weeks, I certainly would like to see the IWM falling. And then what that looks like overall is going to be, how does this translate into the overall stocks? Is the IWM underperforming while the Dow Jones starts to perform well again? I don't know. We'll find out. Okay. Volatility-wise, we're still very quiet. This is the VIX. We're down to 1536. We still have a monthly pivot at 20.53. It's probably going to get hit this month. I don't know when. Maybe towards the end of the month we have a sell-off. If we have a sell-off in stocks toward the end of the month, it could be a 1 to 2 day rally, and this monthly pivot can still get hit, just like it was here. It was missed for the month of May, actually in the month of April. So we missed it the month of April and then shot up and found it in May. This was May's pivot. This is June's pivot. So we can miss it for the month of June and then shoot up and hit it in July, or we can come back and find it this week or this month. So I'm still, wanting to see some movement in volatility, but it just keeps having these little spikes to the upside and they just get suppressed. And so that means what that's showing me right now is the market still loves buying the dip. And these dips are getting smaller and smaller. The areas for the bulls to travel is getting more and more extended. But at the same time, it's like, I just think the contrarian play is don't short the market. It's wild to think like you can be bearish, but you might see this drag on and melt up continue for another 3 months, 4 months, 6 months. Maybe we get through this year. And we've talked about this in the Pulver report. We talked about this revenge spending. We've talked about this economy. We've talked about the markets being forward thinking, right? So all this good stuff, all this recovery, whether it's real or not, is getting priced in. And we keep going back to this chart because this is where I put all of my little, bearish catalysts. Okay, these are all real things. But if this is not enough to make this market drop, if this is not enough to make volatility rally up to this yearly pivot or these COVID highs, which I think that we're not going to see that for a while, but like this could force the market to correct with a reality. But we're not in reality right now. This market is in irrationality, right? So anyway, that's the game. And that's the game that we're playing. That's the game we're dealing with. I like directionally neutral strategies. I like, getting movement either way, bullish or bearish, and making money. That's a good thing. I like taking stocks that you own. I like raising capital and cash and trying to make the best of it. Right? All right. So good stuff. Quick note. Let's see. I've got Denise in the room here. Do I have Dave? Do I have Dave R in the room this morning? I don't know if Dave's in here this morning. Dave should be seeing something for me tomorrow. Denise, I think you're getting something this weekend. So let me know when that little swag package comes. You can send me an email or you can just tell me next week in class. Cool beans? All right, let's talk some. We did some stocks. I wanted to take a look at a couple. So stocks that I'm really liking. Okay, skills. I'm liking the pullback. So I'm looking to get back in. We were in this week. We've been in these for a while. I've been in skills since like $15. We had a nice run up to 25. I did take some profit. I'm looking to get back in. I think I am holding. What am I holding on skills right now? I am holding nothing. Okay, so my skill stock is closed, and I'm looking to add. Pre-market 21.55. I have a pending order. I know I have a limit buy at 18.50. It said, here's my chart alarm actually, 18.50 check for fill. So I have a pending buy at 18.50. I am looking to get filled on that. What I might consider doing, and I'm not entirely, maybe I'll just do a bull put spread. I think I do a bull put spread, and if it stays above there, great. Actually, what I could do is just do a naked, I could sell a put around 18.50 and take the assignment. In fact, I think I'm going to do that. I'm going to do that. Let me see what that looks like right now. I know I have some pending orders on skills, and then we'll switch gears and go into some cryptocurrencies and some Forex. So let me get logged into my account. We have about 17 minutes before the open, and I'm going to look at, I know I have a pending order at 18.50 and another one down here at 13. I think I got in at 13.50 as well. So I'm probably just going to cancel those and look at a naked put at 18.50. And if price falls below that, then I'll get filled. If price stays above it, I'll collect a little credit. So let me see what that credit looks like. And I'll probably put this out until next week or maybe go out a couple weeks. Let's find out. So let me get logged in here. All right, get me logged in. Let's check some skills action. Okay, SKLZ. And if I go out until next Friday and look at an 18.50 put, let me go all strikes. All right, so I'll move this over here. So I'm looking at an options chain here for SKLZ. And if I go out to the 18.50, I could collect 20 cents on that, $19.30. If I did some type of, I would do a short strangle on this where I could sell a call and sell a put to look to collect kind of double credits. But the issue is if price goes higher, then I could get assigned the short call, and I don't want to do that. So in case there is more, break, retest, and go, if there's more upside here, this stock could move very quickly. So I don't want to be stuck short on a strangle. So I'd rather do some type of bull put spread. And I think I'm just going to do, honestly, I might do a couple of naked calls. Maybe one at 18.50 and then one down at like $14. But those are going to pay very little premium. Yeah, I'm looking at maybe 30 to 40 cents. So, all right. I'll probably revisit that on Monday. I'll see what price does today. I'll probably revisit that Monday for the start of my week. Other stocks that I'm liking right now. CLF, I've been a big fan of this one. We're having a nice retracement. And I've got something going on with CLF. I know I have a strangle going on in this one. I still own the stock, CLF. So I have a strangle going on. So I'm Strangling CLF. I've got a sold call at $30, and I have a sold put at $15. So basically, over the next week, I want to see price stay below $30. If we stay below $30 and we stay above $15, which is right here, then I collect my credit, and I still own my shares, and that's what I want. If price falls below, then I'll take another 100 shares. The reason I'm willing to take the strangle on this one is because I don't think we're getting above $30 by next Friday. At least that's my hope. I'm also in a strangle on X, and this one is at $30 as well. So I'm watching this one pre-markets at 28.40. I have this one out until I think next Friday as well on United Steel. So this one's out. It's a 30 by 22. So 30 by 22. I might end up closing my sold call just in case this pushes above. And I would forfeit the credit on that one, but I certainly don't want to be, assigned 100 shares short at $30. I don't want to be short the stock. I only want to be long. So I might end up closing this for a break even or better. I'll see what it looks like when the market opens, but it's probably, from what I collected, maybe break even, maybe a wash. But I do want to keep on that put at 22. Yep. Okay, so a couple of stocks that I really like. And then growth-wise, I just closed out of this stock not too long ago, LOMA. This is a Brazilian bank, I believe. Nope, not even close. Construction materials. I thought this was a bank. I used a stock screener, Simply Wall Street, and found this one. It was kind of hit all the marks for financial health, future growth opportunities, dividends, value. I bought this one around $4.80 and ended up taking some profit. I probably just should have had a sold call up here at $8.50 and just let this run. But I did take some profit this week on LOMA. In addition to Ride, which was a great one. This one I was in at $6 and $6.96. $6.96 with a low at 6.71 and ended up closing out here right around 15 and change. So pretty happy with that. I'm back in on Ride at 11.75 and I sold the $16 call. So if the stock gets called away above $16, I'll take that gain plus my credit to collect on the assignment or the stock getting called away. If it stays below $16, then I'll collect a little bit more. I'll drill my cost down from $11.75 down to probably $11, and I'll go out next week and I'll do it again, and I'll go out next week and do it again. And I'll probably keep doing that until I can bring this cost back down into maybe $9, $8, $7, and just sit on Ride for a little bit. I know we had some kind of disappointing news on Ride this week, but I don't know. I'm going to give them the benefit of the doubt. I'm going to do some more research and see, if they're looking somewhat optimistic. We have stabilized. I mean, we had some awful news, but we've at least stabilized on a bit of this squeeze. So I don't know if maybe Ford and some services out there are really hating on Ride, but I'm hoping that they're able to deliver vehicles and fleets like they're planning on. Workhorse is another one that's had a pretty good run. So recent lows around $7.60. We're all the way up towards 18 plus. I've been in Workhorse since around. Actually, I bought it here first around $17, right at the yearly pivot, $17.50, and then I added at 10, and I added at did I miss my $7.50? No, I got my $7.50. So my break even here is around like $10 and change, and I still like the trade. I'm still going to hold a Workhorse a little bit longer. All right, let's get into some cryptos. Crypto. Things have slowed down quite a bit in cryptocurrencies. We're at 37,400 on Bitcoin. Here's kind of my public service announcement for today to wrap up the week in cryptos. What I'm really interested in right now in cryptos, if I'm looking to buy and hold, fine, I'm looking to buy and hold. That's not going to change. I'm looking for levels with these chart alarms to buy and hold. So anything below 30,000, looking to buy and hold. With Bitcoin, I'm also in GBTC. I got filled at $27 on GBTC. So $27, we're currently at 31.20. That's doing pretty well. And I'm going to try to hold on to this one until 35 and change, which is that monthly pivot for June. So GBTC right now is up a decent amount. $27 is my break even. So if we get to this monthly pivot, and this is my PSA, a lot of these have available monthly pivots for June. after we had an aggressive sell-off, I wouldn't be surprised if we have some of these lows retested that we could get a nice little short-term profit up to these monthly pivots. So for GBTC, I'm in at $27, and that monthly target is $35.50. So if I take profit at $35.50, and I could let it run, but 35.5 minus, let me bring the calculator up here, 35.5 minus 27.08 is where I got in or got filled, divided by 27.08. I'm looking at a 31% gain within a month on that position. That's awesome. So I'm not afraid to take profit there. And the same thing for some other ones. You know, Ethereum, if you are able to buy Ethereum back here at the lows at $18.50, or maybe even something closer to like $12.50 or $1,000, which would be a crazy good bargain on Ethereum. That monthly target, I firmly believe at some point in the next 1 to 6 months will probably get hit. So it doesn't have to be something we have to hang on to for a long time, but if we're buying here, that's a decent chunk of profit. So just to put it in perspective, what would it be if we bought Ethereum here at the lows? That is a 54% gain. If we bought Ethereum at, let's just say we get filled here at this, you know, missing monthly target where the start of this wedge happened, something around like $1,200. If we have something at $1,200 back up to that monthly target, that's a 143% gain. So, you know, rather than thinking I've got to buy these and hold these and never let go of them until we reach these 2021 highs, maybe we have this longer basing that needs to take place. Okay, and so if we take time to base, if we take time to still correct, and this monthly target is still available, it might take time, but for me, that is at least a profit destination until we end up hitting those highs from 2021. All right, so I do like that in the short term. So I'm trying to set chart alarms at lows and get filled back up. Litecoin's another one. This one I did pick up at $120, and from 120, 120 was my fill. Man, that was such a lucky fill on that limit order. That is a 100% gain. So a couple $1,000, make a couple $1,000. That's pretty fun, right? If it takes a month, I'll take it. If it takes 6 months, that's fine. Hopefully it doesn't take that long. Other ones, I think we have Algo has an opportunity for some monthly. That one I already hit it. Never mind. Even though I'm still thinking that Algo from this support around 90 cents to $1, we have room to run up towards 170 to 180. So I've talked to the traders about this one for the last couple of months, you know, watching these lows, buying low, and then taking profit at the high. Buying low, taking profit at the high. If this is going to stay in a range, you know, you can trade this, right? We can trade ranges. So that's an opportunity. MANA, same thing here. If I have a chance to buy this one again, this is the monthly target around $1. If I could buy this one back at 50 cents, there's a 100% move, right? So pending order at 50 cents, take profit at $1. I love that trade. MANA, that's mana. Okay, so a little bit on the crypto front there. Let's go to some currencies. I'm still liking dollar crosses. I just want to get traders ready for this. You know, the dollar's responding a little bit better today. As far as the currency strength goes, I have the meter up right here. So the New Zealand dollar is the weakest. We have the dollar and the CAD, one of the stronger ones. Volatility-wise, it's still pretty quiet. So there's a lot of sideways movement, right? We are on the right-hand side of the trend line. I am getting mentally ready for the following. We might have one more push, right? We might do this on the dollar, have one more flush coming down to fill this level, find these lows, and then reverse. And that's what I'm looking for. I think that the dollar can make this move. I'm kind of over the fact that the dollar may or may not get to this yearly pivot this year, but I think if we end up finding these lows, we have a trade back up to these highs. So I will still be long the dollar. I'll still be long dollar CAD. I'll still be long dollar Swiss. I'll still be short New Zealand dollar for right now and Aussie dollar for right now. But I think that the way that this is looking, it looks pretty corrective, right? So pretty corrective means that unless this starts to really jump aggressively to the upside, I have a feeling that we are going to have this be a corrective move in nature and then start to break for one more flush down, right? But one more flush down, then I'm looking for a transition to go back up, target the high, possibly target, you know, that because this could be a double bottom, right? We could have a double bottom here where it holds the low, breaks here, and then has this big trade to the upside. We still have pockets like crazy back in 2020. So just saying, there's a lot of scenarios, but the way this is looking right now, I feel like we're going to see one more push. One more push? We're going to see one more push. If we don't, cool. Pleasant surprise for us. But if we do, I'm just saying, we should be ready for it. Okay? I'll be ready for it. All right, that's the dollar. But I still like dollar CAD. Extremely sideways, right? Very quiet. All the indicators that I'd like to see on the daily and weekly chart are there. We have a monthly target at 2150. This is going to be the most important thing. I said this week in the flex room. We have to break above 2150. All right? The only reason that I'm not in my broker platform right now for Forex, and I am not using buy stop, buy stop, buy stop, buy stop, buy stop. The reason I'm not using that right now is because I feel like we could have a fake out move and still come down one more time. You know, we could have the market with these low volatility environments. The market could make one fake out to the upside, come back down and flush out these lows, and then build that base to go back up towards 26. I still think we're getting to 26. I think we could have a reversal pattern that gets us all the way back to potentially 130. Okay? I still think that oil has to drop, and it's not dropping yet. You know, the Keystone Pipeline getting canceled, is that going to help oil prices? Possibly. We could have oil drift up into $75 where those 2018 resistance levels are. That's fine. But it doesn't change the technical outlook, right? It doesn't change that this resistance should hold and that oil is ridiculously overstretched at this point. And from this high to this high, I'm going to take this to a weekly chart. Okay, we can already see that on the daily chart, we're starting to stretch into, we're making new highs in price. We're less than that with momentum. So there's a bit disagreement there on momentum. We're also stretching back into overbought territories, which we had the same thing here. Last time we were overbought, you can see the market corrected. Okay, and so we corrected from this top down about 15% in oil. So could I see the same thing happening? Sure, but maybe we have to drift a little bit higher, find that 2018 level, have this very noticeable disagreement, and have this thing be overbought, and then we start to see oil unwind. You know, unwind to 57, unwind back down into, you know, $50. I know that technically speaking, if you're a, you know, Elliott wave person or a wave type trader, you're probably looking at something in oil back here at this previous resistance around $44. So if we have some type of topping pattern, oil could certainly have a correction back down into this past resistance. But I'm more conservative than that. I think if we come back to revisit $57, I would be happy with that for corrections. If we come back to this past resistance level around $52, I would be happy with that for corrections. So as far as being short oil, I'm just waiting for the evidence to finally short oil. And my way to trade that in Forex is to basically be short the CAD. I think the CAD has a good opportunity to correlate. You know, we've seen a lot of resiliency in the CAD because oil has stayed pretty sustainably strong. And once we start to see the signs of that turning, oil starts to drop, so will the CAD. You know, so that would be my consideration on watching oil. There's heavy resistance here on the daily chart, all the way back to 2018. If I go to the weekly chart, check out those indicators again on the bottom. Okay, so we have a completely overstretched move. This is overbought and divergence. And take a look at my weekly chart. Okay, I mean this is the type of stuff. These are my two kind of favorite indicators for looking for highs and lows, overbought, oversold conditions, protecting my trends if I'm long on oil. I would not be long on oil right now. You know, all I'm doing is I'm literally buying the drift to these multi-year highs. I don't like buying high. I don't like selling low. So right now it's like I'm just waiting. This is divergence. This is overbought. This is hidden bearish divergence. It's like, come on, just friggin' work. So the one thing that's been frustrating trading currencies and Forex is that the trades that we're seeing, the trades that are incredible alignments, I would take these trades 100 times out of 100. That's how much I like these trades. But it is just taking time to have them confirm. It's taking time for us to get the signs that it's like, okay, the coast is clear. Now it's going our way. And that's what's driving me crazy. And so in the interim, what I am doing is I'm using, a couple of robots, Perfect Storm, mainly my Active Storm, my Range Storm, to try to kind of finance my waiting period. Let it make me 30, 50, 100 pips a week on a couple of currency pairs. Finance my waiting. And then when I do get these trades to go my way, I really start to use that margin to add to my winners. That is the plan. Okay. All right. So that's a little bit of oil. Look for the CAD. I think the CAD basket looks pretty promising for some weakness. CAD yen, same thing. We're sitting up here at multi-year highs. We have crazy amounts of pockets and pivots. We are, this is a weekly chart again, overbought conditions on a weekly chart. That doesn't happen very often. You can go back to multiple years here. The last time we had this is oversold back in 2016. This was overbought back in 2013. It has not done this in 2013, then 3 years later, now 7, 8 years later. So it's like it means something. And every time you see this correlate with the market, take a look. Did we have a top here when we were overbought? Did we have a bottom here when we were oversold? So, even though we haven't officially had a market move to the downside, I just think that technically this is a good indication. This is a good divergence level to look at multi-year resistance to fall. Okay. And really the question is, how far can it fall and how much money can we make when it does? And that's the fun part. But obviously we want to have it start paying us first. So a little confirmation goes a long way. That's what I'm watching for. And we'll continue to have some fun in the flex room talking about how patient we are being. We'll pat ourselves on the back for being super patient. But I also think that we'll be rewarded for this patience because the technicals are right there. Okay. All right. So that is some CAD yen. Anything else that I'm really liking? I really like this pound CAD as well. I know it's kind of CAD heavy or dollar heavy right now. I'm still looking to load up. I have the 6987 buy level on the pound CAD. I did take some profit this week for about 100 pips. And it was like 7,000. It was like 70.25 all the way to 71.50. That was a little scalp for this week. But other than that, I'm just holding 69.87. I'm looking to get back in at equal lows around 70.40. And I'm just going to kind of scalp this area for right now. I'll buy low, take some profit. I'll buy low, I'll take some profit. But what I'm looking for is if and when we break this level, which is around 71.75, if we break above this, I'm looking for this to continue up into this weekly pivot and this, pocket area around 74 to 7,500. So, the reason I'm looking to scalp it is like, if it just goes sideways, it does me no good to just add more positions and hold a bigger trade. What I would rather do is take a trade, take some profit, get back in, take some profit, get back in, take some profit, and do this maybe 2 or 3 times. And then eventually when it breaks to the upside, I will add again and then stack some orders up to my profit, which is around 74.50. And so I'm hoping that I can hold this position for more of the long-term trade. I can scalp in here for some nice, weekly income or so, and then I can add to my winners when we finally have the confirmation to break and go higher. So that's a nice way to play it. All right, any questions on that? So pound CAD I really like. Dollar CAD if it gets above 21.50. CAD yen if we start breaking back down. Aussie CAD, New Zealand CAD, I'm going to let those be robot trades. Aussie, New Zealand, I want to take a look at this one really quickly. Aussie, New Zealand is, moving pretty stubbornly now to 108. Now, I'm going to watch this closely because we just had a recent range that broke to the downside, but it was clearly a fake out. And I said this, if we come back up to this level and close back over 107, I don't want to be short. All right, so what I'm looking for now is this level at 108. If this holds, resistance-wise, we're just going to come right back down and be this tight kind of 100 pip range on the Aussie and New Zealand. All right, if for some reason this decides to keep trending, okay, well, what does it look like? We might trend to this high. We might trend to this high. One thing I'm noticing from just today's candle, this is what we're going to talk about next week. If this trends aggressively and keeps going, some of you that know how I like to trade with some pockets are going to see that that is a pocket. And if this continues to go, what I may look for is I will just look at shorting probably around 1050 and working through, from let's say 1050 all the way up to like 1400 and then work my way back down into that level. All right. So it's not done yet, but as many of you know, the last several years, this currency pair has made me a lot of money. And so if I have a good setup on it, I'm going to pay attention. So this is potentially a good trade setup. And I want to see how today's candle closes and how next week opens and just give it a couple of days to give me a chance to see if we have a good trade setup. Okay. All right. Anything else? Any other stocks you want to chat about? I do have something to share. If anybody was in Equities on Demand this week with myself and Tyson, we had an awesome session yesterday. We had a little bonus lesson that I did put in the classroom. One of the stocks we got into was MARA. This is a stock that in particular is a company that mines Bitcoin. And so we bought yesterday at 26.40. We sold a call. We sold a put. We essentially put in a bit of a, it's not a straddle strategy. We're looking to kind of collect credit. And so we just walk through these different scenarios, because what's pretty amazing about, having stocks, owning stocks, and utilizing options is if stock price goes nowhere, you can make money trading options. If stock price goes up, you can make money trading options. If stock price goes down, you can still collect some credits and you can lower your cost basis and still be willing to hold the stock that you want to own. So in other words, if you believe that the stock's not going to zero, not going bankrupt, then there are multiple ways in which you can have, own, trade options around them, and either lower your cost, collect credits through your weeks, collect credits through your months, and you're not sitting there stagnantly holding a stock that's doing nothing, right? That's one thing that, we've been spoiled as stock traders the last couple of years with all this volatility. The market's been incredible. Like literally, traders are just buying naked calls and getting paid to do that. And, and that's great. But it's also, it's interesting. I watched this documentary, I think it's called Explained, or it's Money Explained on Netflix. And they have one in particular about like trading, like online trading, like Robinhood, and how it's, really an app designed for like a gambler's mentality. And again, I'm not knocking anybody that trades on Robinhood, because I have a Robinhood account. I'm not knocking anybody that trades naked call options, because you're being rewarded for it. But ultimately, when the market stops moving 50% in a day or 30% in a day or hundreds of percent in a week, and stocks settle down and things cool off a little bit, those are going to expire worthless, and you're not going to make any money on a directional naked call or naked put, more than likely. So having a spread or reducing that risk, or like we like to do in Equities on Demand, is we like to sell our options so we can collect the credits. And it's just a little bit more of the insurance play versus the speculation play. So lots of ways to play it. Fauna says pound yen. Okay, we'll take a look at the pound yen. Pound yen, 154.96. Yen pairs again. If I'm making predictions here, I think the yen basket is due for some strength. I think the CAD basket is due for some weakness. I think the dollar basket, if we have one more flush down, it makes sense to me that we would see that. But to me, the dollar is still due for some strength in the next 3 to 6 months. Okay. Pound yen, if I just look at the technicals, again, I'll take a look at my chart here. The daily chart, I'm looking at, okay, we're coming off of this overbought. This is hidden bearish divergence. We're coming off this high to this recent high. This is divergence. So, how far does it go? All I'm really looking for is this. And we've talked about this pretty heavily in the flex room. If I just connect these lows, okay, and we have this inner trend line breaking, all I'm really looking for is this. If this is an inner trend line and we start to break it, I think we just start making our way back to this outer trend line. You see that I have this past resistance level. We have this nice little, box and pocket between 146 and 147.50. So I am looking to get short. I liked short on the pound yen here. I still like short on the pound yen here. We have a robot ready to deploy at 153.40. If we get below 153.40, I'm looking to take this down into this 148 to 146 area. And then you have to look at this like, okay, so we've had a 2,000 plus pip rally. Can we have a high, low, lower, high, lower, low? Absolutely. So that is essentially what I'm looking for. If we have a 3-wave move, look for a downward move, lower high, lower low, and then I'm getting out of this trade. I know that it might come down lower. It might come back and find multiple targets as they've been missed. But if I am in a trade and I'm against the grain of this trade, I know that my job is to get out of this trade with some profit and not try to fight the markets and not try to fight the trend. So to me, it looks good to be looking to sell, be ready to sell, but I want to see a bit more confirmation below 153.40, and from there, drop down to these lows. So if we go high, low, lower high, lower low, I'm getting out of here with some profit. And that's my pound yen. Okay. All right. Any questions? We can go and wrap it up there for the Pulver report. I've got class in 20 minutes for Equities on Demand. Overall, just a steady week. We've got some Master Blasters that we still have plenty of time on. We have out until the 18th on a handful. We have to the 25th. We have until the 30th on IWM. We're going to talk about some power plays today that we have expiring. I did get some break evens this week on some of the older trades, but we'll take a look at everything and see what the market wants to do. Really quickly on the market side, let's go to marketwatch.com. Take a look at the dashboard before we kick things off. Wall Street's officially open. U.S. market is in the green, 0.27% positive on the Dow, 0.15 in the SPY, 0.09 in the NASDAQ. Gold is down from the highs this week. We're at $1,900. Now we're down to $1,880. Oil still hanging tough at 70. It may drift to 75, right? It may drift to 75. Futures-wise, a little mixed. NASDAQ futures down, actually pretty heavy. They dropped really quickly to get back to negative 0.06. S&P futures up a little bit, and Dow futures up. So when I see Dow futures outperforming, to me that seems like, okay, if Dow futures are up, or Dow in general is up, that means value, right? That means value stocks. If NASDAQ, S&P are up, that means growth. If IWM is up, that means growth. So if the Dow is going to outperform, don't be surprised if the IWM starts to fall. So let me take a look at that, how the IWM opened this morning, and then we'll wrap it up. IWM is at 231.36. And for the day, with the daily chart, a little bit of a green candle, but chart alarm sitting right above the highs, not activated. We are sitting in some puts. Hopefully we'll see this, head back down to 220 or head back down to 212, and we can try to capitalize on a move to the downside. So we'll see. But it's a tug of war. We're drifting into like this really overstretched melt up. How could the markets go any higher? But as they say, the markets can remain irrational longer than you can remain solvent. So don't be married to a position. Don't be calling the top. It's like, be neutral. If you want to short the market, that's fine. But you have to have some type of exposure to be long the market as well. That's the beauty of hedging. That's the beauty of having, something that's exposed where you can be long on something to make money, be short on another. It's like if one works, it's like, obviously it's not something that you want to be, one's going to be wrong, but you're trying to get the winner to be bigger. So the net is going to be a profit, so it's possible right now. You could be like, you could be either long IWM and short the Dow, or long the Dow and short the IWM. And that would be a pretty good hedge, because one of those is going to play out and be correct. Either we break these highs in the IWM or we fall, or we break the highs in the Dow or we fall. And so if you have those type of setups, you can make money. But it's a very weird time, because like volatility has gone down quite a bit. Volatility is super low in Forex. Volatility has slowed down a lot in cryptos. We're barely eking out these, fractions of 1% moves on the stock market. We're seeing less and less movement, less and less volume. And again, it's kind of painting the picture of something bigger is going to happen. Maybe it's not now. Maybe it's not now. Maybe it's not July. Maybe it's in August with a transition month. Maybe it's a post-summer breakout. Maybe it's September, October with some turbulence and volatility. So who knows? So be patient. That's the most important thing. Be patient, be committed, do good equity management, and trade accordingly. All right, everybody. Thanks for being with me today. I want to let you know I do have a couple videos coming soon. I just finished up a long script for one I'm going to be recording this weekend on trading robots, like trading robots so they actually work. I have some testing to do. I talked to some traders this week in my flex room about some systems that I'm working on in the Forex market. So never a dull moment in the markets, always busy, always enjoy spending some time with you like this in the Pulver report so I can just talk about what I want to talk about. Good stuff. All right, traders, I'll see you in Equities on Demand in 17 minutes. Thanks for being with me today. Join me again on Monday at 9 o'clock for the Pulver report. Have a fantastic Friday, great weekend, everybody, and we'll see you soon. Thanks.